Hi there, it's Chip Barkel with eXp Realty in Willowdale, and I am also your local leader for the Park Bench platform in Willowdale. Today I'm having a conversation with Paul Rekai of Maple Mortgage Group, associated with Oriana Financial. How are you today, Paul?
I'm doing great, Chip. Thanks for having me on. Excited to chat. Lots to discuss. Take it away.
Absolutely. Well, I guess the first thing I usually ask people, tell me a little bit about your business, but you're a mortgage broker. I guess why should somebody be interested in buying or selling or refinancing their home and using a mortgage broker as opposed to just calling their local bank?
Yep. Fair enough. Great question. So first of all, I'll introduce myself. Yes, as Chip mentioned, my name is Paul Rekai. I am one of three partners at Maple Mortgage Group. We are powered by Oriana Financial, which is one of the largest independent mortgage brokerages in Ontario. We operate quite independently as a team. But yeah, just to kind of, work on your question there, Chip. Why to use a mortgage broker? I mean, first and foremost, I would say expertise, right? We only deal in mortgages. This is what we do day in, day out from start to finish, right? Walking into a bank, speaking with a branch member, et cetera. Of course, all due respect, they are, working with multiple products. They're, familiar with different things. This is not what they do. This is not their bread and butter, first and foremost. And second of all, Chip, you're a realtor, obviously. You travel from house to house with your clients, vetting the great fit. You know what I mean? Sometimes, the odd times it is the first house that you end up going with, but it's not without looking at others, right? So for us, it's all about vetting options. Mm-hmm. And with the access we have to all of these options as brokers, with 25 plus lenders that we can send theoretically your mortgage application to, we have those options. So if you're doing it with your house, finding something that, tailors your lifestyle, et cetera, it should be done the same way with a mortgage. So, and of course, a mortgage product is not a simple thing. It's not a simple loan. There's a lot of complexities. And as experts, our number one sort of goal is to educate our client. Mm-hmm. So we want them to understand product fit and terms, et cetera, and go totally wide-eyed into a very, very large purchase, the largest of their life likely. So it's all about expertise, about educating our client, and about, vetting options. And as well, we are totally third party, right? So the only obligation we have is to our client. Mm-hmm. We're not going to, nobody has ever turned you away at a bank because the product doesn't fit you. You know what I mean? So that's all the obligation we have. It's to our client. And we also provide that flexibility similarly to be on the client schedule. We don't hold bank hours. We don't work 9 to 5. Trust me, I don't work 9 to 5. I make myself available for the client whenever they need, right? Yeah. So that's kind of the overall outlook as a broker, as well. We like to, make connections with our clients. We like to learn about them. We like to see their mortgage as kind of, one part of the larger financial future. As we tend to do, we do a great job and we're taken along for the rest of the ride, whether that's, investment properties in the future, refinancing, accessing equity in their homes. We're along for the ride and we're a trusted source to, keep an eye on all of their home financing needs.
Absolutely. That's great. A couple of things came to mind, kind of a parallel to real estate. If you're dealing with somebody at a bank, they're not really looking after your interests, or they're serving the interest of the bank, right? Whereas if you have a mortgage broker, you're the client and they're going to say, okay, I want to represent you to the best of my ability. And I have these 25 sources of financial products to use. So am I wrong there? You're representing me a lot better than the bank is.
Yeah, so we're utterly third party. We do not have any obligation to a specific, lender specifically. Now, the great thing about, so as I mentioned, Maple Mortgage Group is powered by Oriana Financial, a very, large independent brokerage. And the great thing about associated with that certain brokerage is that we do business with every lender. Right. We do a lot of business with every lender. Mm-hmm. And there is, nuances in the brokerage space, regarding, incentivization from different, lenders, et cetera. We don't have to worry about who's incentivizing us one way or the other where I work. And in my space, that allows us to be totally third party. And yeah, no disrespect to anybody who working in a branch, et cetera, their bank is paying their bills too. I mean, they're being paid by their bills.
Yeah.
We just at no cost to our clients, and we get an origination fee, which is going to be the same pretty much across all the lending space. So yeah, utterly third party.
One thing I'll add, when I phone a bank, more often than not, it's press 1 for this and 2 for that. And then I finally get through to somebody and it's on voicemail. They may or may not call me back. With you, whenever I call, you pick up. So
yeah.
That's
what I pride myself on.
Yeah. That's great. It's been great. I'll just move on a little bit. I work with a number of first-time buyers. So what are some of the products or benefits that they should be aware of when they're looking for their very first mortgage? Because often they don't know what they don't know.
Totally. And that's the whole thing about first-time buyers. First time, right? And no prior experience. Obviously, the lending space has changed. Mortgages have changed. So, even leaning on a parent or a loved one close can be outdated, etc. So yeah, first time homebuyers come in blind, and as you can imagine, a lot of my personal network is in first time home buying years. So I deal a lot with first time homebuyers, and I take kind of special care, obviously, because they go in so blind. So there's a number of incentives for first-time homebuyers, and there's a number of things to keep in mind from a mortgage standpoint in terms of product fit, where you may want to place your mortgage, et cetera. So first and foremost, the government does incentivize first-time homebuyers because, of course, it is so hard, especially when we're talking about the Toronto market, to save a certain amount for a down payment at a young age. And, especially, double that with paying rent up the wazoo, trying to save, right? So, there are a couple incentives that the government utilizes to, help them kind of get their foot in the door. So one of them being kind of the RRSP home buyers plan. That's, you can withdraw up to $35,000 from your RSP to put towards a down payment. It's totally tax-free, interest-free. So this is great for finding extra cash for a down payment, even to cover closing costs. Important to keep in mind that home buyers plan, it is a loan from your RSP, so you do have to repay it, but it provides that added flexibility to kind of get the capital up front to put your foot in the door. Now, as well, there's the land transfer tax rebate, another governmental incentive, which, the land transfer tax is the largest chunk of what will be your closing costs on a residential transaction. In Ontario, it differs from Toronto. Toronto has doubled the land transfer tax, but luckily they have doubled the land transfer tax rebate for first-time home buyers. All right, so it's up to, I believe, $8,725 on the Toronto rebate, and about half that for Ontario. So that's a huge helper because closing costs, nobody really talks about them until you get the bill. And luckily, the banks are pre-approving based on a certain amount of additional assets to cover closing costs, but it's not a talked about thing. And it is kind of the punch of the gut of the home buying process. And that land transfer rebate really does a lot to, increase savings for first-time home buyers.
Yeah, I try to do a net sheet for my folks, and I include that as a line item because I don't want there to be any surprises.
Yeah, and I think it should be honestly, for both of us, almost mandatory, right? It really is going in blind, and especially for the first-time home buyers. So many of my clients, even with all the warning, with all the 2%, what they ask from the bank, it's real. What they ask from the loan, show 2% extra. It's going to be about 2%, 1.5 in some cases. And every time they get the bill, it's still, hurts. But and there's a couple other little incentives that the government offers, tax credit, $750 tax credit straight up, energy efficiency rebates. So there's some good programs the government offers.
Okay, something to look into. Can you tell me what the difference between pre-qualifying someone for a mortgage and pre-approving them? Is there a difference?
Totally. Yeah. So there's not all that much of a difference. I would say, it's nearly identical for the sake of a pre-approval usually comes with a letter of sorts and kind of lays out a conditional approval based on numbers that you've offered that have not been back checked to this point. And really the only thing a pre-approval sometimes can offer, because these are not underwritten, approval letters.
Right.
Nobody has looked at, any sort of documents. They're just kind of going based on the numbers provided.
Right.
And a pre-qualification is similar, going off numbers provided. A lot of people do it similarly. But on our team, we all come with, industry kind of expertise. We've all worked in the back end of the mortgage industry. We all know how to underwrite ourselves. And it's an extreme strength of our shop is that we all come with, extreme underwriting, experience and know exactly what to look for. And what we do is, we know how competitive it is. We know people want to be firm in what they can afford. We ask for everything up front. So when we pre-qualify, we pre-underwrite. So we are vetting, pre-approvals prior to any sort of offer or close on a house. We're offering kind of the full thing because luckily with our experience, we have a very good idea of how a lender will look at it. Right. When it actually is submitted as a live deal and as a full application. Now, where pre-approvals can differ, and we offer pre-approvals ourselves, but when people are looking for a lender pre-approval, what they're hoping to get is also a rate hold. So usually rate holds can last from anywhere from 90 to 100 days. But these are usually not the best pricing offered by the banks. This is not usually the special pricing, the unpublished pricing that as brokers we have access to. This is good pricing, and it's a hedge for rate movement, but it's a hedge for quite aggressive rate movement within that 120 days, which we obviously don't see all that often. So that would say that's really the only nuance with a pre-approval. It comes with a letter. It comes with kind of a rate that's promised if a deal goes live and closes within that day period. But for us, our pre-qualification is extremely extensive and it is pre-underwritten, and that allows, and I think we'll probably get to talking about this, flexibility in offers, especially in hot real estate markets.
That's actually where I was going with that. As a realtor, I represent first-time buyers, and our Toronto market is really hot. Even north of Toronto. I was in a deal a couple of weeks ago in Bradford, like an hour north of Toronto. And, it was a townhouse. It was okay. And, we were up against, I think we were 5 offers, 1 of 5 offers. We thought, okay, well, we know we can't have a condition for financing because, we won't get it. So that's what I'm concerned about, is protecting my clients. In that case, we were, 43,000 over list, and it sold for 100,000 over.
Unbelievable.
But obviously everyone has their limits. So, I don't want to put somebody in a situation where they can't afford it. But on the other hand, want to put them in a competitive situation with the offers. So can you speak to that?
Yeah. So, it's obviously a very relevant question. It is a tough topic, right? And kind of as I mentioned, in terms of the pros of working with a mortgage broker, it's about educating your client and kind of, walking through the process with them eyes wide open. So when it comes to, current real estate market where firm offers are almost, necessary in certain, certain bids, it's something that we can never, in good standing, fully recommend, right? Because there are risks associated with it, and unforeseen risks occur from time to time. And for us, we need to educate our clients on the risks. Now, there are definitely scenarios where there are far less risks, and there are scenarios where there are larger risks. And when it comes to going from pre-approval to approval, like I said, none of the income documentation has been vetted, in a pre-approval scenario from a bank, for instance, a bank pre-approval letter. And first and foremost, right, this is a loan to you. You're vetted as borrowers, but the collateral is the property. So what can be really tricky is, making sure that the collateral, the property itself, comes back as the property value that you thought it was on a purchase price. And I know, Chip, obviously, you've been in the game long enough. This is not something that you would find yourself you have an issue with, but, sometimes you buy something and an appraisal will come back and it's comes back lower than the purchase price. And that's going to really affect, qualifying for an application, because you're going to have to cover that dollar for dollar, that difference in appraisal versus purchase price, dollar for dollar in the down payment. And, if you have access to, a family member with gifted funds, if you have more money saved up, et cetera, then yes, you can cover it, but sometimes you can't. So, and then when it comes to the second half, right, it's income confirmation. So it's the property and it's income confirmation.
That's right.
So with people who are, salaried, salaried full-time, this is what they get on an annual basis. They've been working there for a couple of years. Those are less risk involved when it comes to firm offers, right? You know exactly how a bank is going to view your income. It's a number. It's not going to fluctuate. We can tell you straight up that, there's obviously a lot less risk. Like I said, the property side still exists in strong markets. It's not as big of a risk, So we have to educate them, never saying do it. Yeah. But if it's needed, and we trust our realtor partners and we trust these people, working on their behalf, that if it is, necessary, then we understand and risks need to be taken. But when it comes to less easily verifiable income, whether it's commission, variable income, gets trickier again. So it is really about educating your clients and working in conjunction with other real estate professionals, i.e. their realtor, to inform everybody on, the potential risks associated with it.
Yeah, and I always assume people are, telling me the truth. So how much money do you make? That's the bottom line. You want to make sure of that. I know when I bought my first house, it was, like 9:15, 9:30 at night, and my realtor at the time, it was before I was licensed, said, are you pre-approved? And I said, no, I told you I wasn't looking. It just, it couldn't have happened. And so he had somebody call me. Now it was a bank. It wasn't a mortgage broker. But I remember saying to him, well, when will I find out if I'm approved? And he said, well, if I can verify what you've told me, you're approved. And I was like, well, of course I've told you the truth. It's like, it wouldn't be in my best interest not to. So
exactly. But these are, it can be sensitive topics sometimes with, people's full financials, and, and especially in, commission roles, you expect to make a certain amount at the end of the year, but, it's not being proven yet. And you have the last 2 years that you're going to be evaluated on.
That's right.
So, it's never, it's very rarely dishonesty, sometimes just, an overestimation. But it's a very relevant topic.
Well, that's why it's one of my first questions, have you been pre-approved? And if not, call somebody like Paul Rekai or Oriana, and he'll take care of you and have that conversation. And then what you can afford. We have the budget, we can go shopping, and we have our parameters. So.
And that's how it's done, right? And that's the best way to do it. And we've found that asking for everything up front in terms of documentation, we hold a preliminary conversation, kind of a get to know, both one another as a client and as, a broker, initial conversation. What are your plans? What are you looking at? And we'll ask preliminary income conversation questions just to get an idea of where fit is going to be and whether it's kind of the good time for them or not, et cetera. And then, with just a light vet, prior to a pre-qualification running the numbers, we're going to ask for all the documents up front.
Of course.
We want to make sure people are as flexible and, can turn on a dime in competitive markets and know exactly how much they can afford going through. So come to us first and, have the peace of mind moving forward. And then, once the time comes, we have that larger discussion about where you want to place a mortgage, what it's going to look like, fine print, product fit, terms, et cetera, which we can have anytime during that.
That's great. Yeah. I'd like to shift gears a little bit. And we've been talking about first-time buyers, but if we can shift to clients that may have sizable equity in their homes, I'm thinking of friends of mine who have sons or daughters that are going off to university in the fall. And, given everything that's happened with COVID, if it were me, I'd much rather buy a condo near campus and say, what, I'm not going to spend thousands on your dorm, but have you living with, hundreds of people and being exposed to who knows what. So, is that the kind of thing they could do, is take equity out of their home and purchase an income property?
Yeah. Certainly. That's really where, additional expertise comes in handy, right? Because now you'll be looking at, multi-part sort of transaction, multi-part lending, multi-part borrowing, right? And that's where we really come in handy to evaluate that. So yeah, I mean, unfortunately, there are all sorts of hindrances, not unfortunately, of course they have their reasons, but throughout the lending institutions for things that fit in a cookie cutter, right? Policy always has to be cookie cutter. It has to be mass applicable. So with equity, it can be tough to be able to utilize it to buy a second home, for instance. And now more than ever, there are great reasons to do it. But there are all sorts of options. So first of all, right, refinancing is big, and refinancing intelligently, and refinancing in a timely manner at the right time, and knowing all the costs associated with it, whether it's worth it. So that's the easiest way to access equity, right? Refinancing and having an equity pullout, putting cash in your hand to create a large down payment, so that you say like you're already 50% in equity of your next purchase, right? Yeah. And that's going to really make qualifying and having those two obligations, because at the end of the day, you have two loan obligations, you have two monthly payments or whatever it may be. And the same income qualifying is going to, for the most part, and there are specialty programs, but for the most part, the same income qualifying kind of parameters are going to, reign supreme. So making sure that you can qualify and afford two loans, and making sure you can utilize the equity to make that affordability of both loans as easy as possible.
Okay.
Yeah. And then of course, getting additional products that, you can use your house as collateral, right? HELOCs, home equity line of credits. You can, put money down from a HELOC to a down payment. And even in some cases, you can do unsecured line of credits. And that's very lender specific. And obviously, more debt decreases affordability, but there are options out there to access equity. And there are specialty programs as well, for instance, for people, who, could be in their later stages of, employment and are looking forward to retiring and maybe not making the same income they used to, but they either have, some equity, or they have, additional net worth that some lending institutions will, lend above a certain amount, dollar for dollar, to extend that affordability range. So there are options, and we have access to all of them, right?
Yeah, and some of the situations I know of where they've actually paid off their main mortgage have all this equity, and I think that's a natural time to start thinking about an investment property, especially if your son or daughter is the person who's going to be renting from you. So I'm just saying, why spend all that money on dorm fees for 4 years? And in some cases, they have multiple kids, so sometimes that makes sense to think about an investment property.
Of course. And as we know, Chip, it's, it's best to, work and lean on with people that you have relationships with. So you've done, one transaction with us. We've got to know you as borrowers, kind of your, financial appetite, your financial plan. It's as easy as, making a phone call to, us who have a lot of your information, or at least understand what your current mortgage is at, to ask, casual questions. Is this is this a possibility? Is this potential? Like, as we stand now, do you believe we can afford another mortgage for an investment property? The cash flow, what we can get from it makes a lot of the sense, but will we be able to qualify?
That's right.
So, once you work with us, you're a phone call away from just that sort of expertise and that advice that is always so accessible.
That's great. Anything else you'd like to add on the mortgage front before we close?
I guess I got into, going back to first-time homebuyers a bit. I feel like I touched on the government incentives, but, from a mortgage standpoint, it's, there's a lot of nuances and a lot of things to consider from, a product perspective. So, I think one of the largest things that we look at with first-time homebuyers is, they're new to this, they're young. And when you're younger, there's more unforeseen things that'll happen, whether that's, having children earlier than you expected, getting in a long-term relationship, the need to, upsize, relocate for a job, et cetera. There's so many more kind of variations, usually in first-time homebuyers' outlook, that flexibility in a mortgage product is utterly, crucial. Especially when, mortgages can be priced so competitively across the board. Finding the product nuances is really what's going to save you, money over the length of your mortgage, looking at a full cost of borrowing kind of perspective. And one thing that kind of comes to mind when we talked about, bank versus broker, et cetera, and some of the, the added kind of expertise we provide, we also have access to non-bank lenders that have far less punitive, for instance, breakage penalties, right? So the average kind of stat for first-time home buyer in their first house, 5-year fixed term is kind of all the mortgage term everybody knows. It's the most popular one, and it's priced most competitively, to be fair. Mm-hmm. But first-time home buyers, they'll on average only be in that first house for 3 to 4 of the, 3 to 4 years mm-hmm. out of the 5-year term. They'll break it to, upscale, relocate, et cetera, like I mentioned. Yeah. And with bank fixed rate mortgages, they have extremely punitive breakage penalties. Yeah. And they're calculated, quite convolutedly. Mm-hmm. And it's one of those things that you'll never really see coming, and it'll be utter sticker shock, if you're breaking a, sizable mortgage 3 years through a 5-year term. Mm-hmm. So these can be upwards of 20K, et cetera. There are horror stories of well above that. Mm-hmm. Now we have access as brokers to additional lenders, non-bank lenders, bank lenders as well, but non-bank lenders such as a monoline who only really deal in mortgages and lending products. So they are actually far better of an alternative for first-time home buyers, we find, for the most part, based on the less punitive nature of their breakage fees. Yeah. So they have a little more reasonability in how they calculate breakage penalties. Mm-hmm. And usually at a bank, versus a bank, they're going to be on average about 4 to 5 times less punitive from a dollar amount standpoint. So something like that, where just kind of the education of the potential that may happen, the unforeseen stuff. That's right. And that's where us as experts, having seen, clients go from year 1 to year 5 in our mortgage and having our book turnover, et cetera, we can see some of the pitfalls that, past clients have gone through, and being able to educate them on all of the, the ramification in terms, products, et cetera, is really where obviously we add a lot of value. So I would say that is very critical addition to the first-time home buyer sort of conversation. Mm-hmm. And that's why, we deal with so many, obviously.
That's why I always ask my clients about portability, because, they go in thinking, oh, I'm going to live here forever. And 2-3 years later, like you said, they're in another relationship. They want to move from the condo to a house, maybe think about having kids. So at least if they can port that mortgage, it's usually they're going from, a mortgage to a 2X mortgage. So their mortgage usually doesn't go down. It usually goes up. So
Yeah. And it can be the big difference. Obviously people are rightfully so rate sensitive. Yeah. But a couple basis points here and there are never going to cover the costs that, an extremely punitive breakage penalty.
Yeah. I find the features more important. And
exactly.
Was new. I didn't know that either. I learned it through experience, but mm-hmm. And when you're new, you think, oh, it's gone down 0.25. Isn't that great? Yeah. But it's, can I prepay? Can I port? Can I, what are the options that I have? So I think that's important.
We as brokers, we don't want them to find out like you did on experience, Chip. we want them to know from our experience and from our expertise, right? This is unfortunately just the pitfalls, like a lot of the times that you learn throughout life. So we're going to try to help with that.
Well, thank you very much, Paul. I've been talking with Paul Rekai of Maple Mortgage Group, which is powered by Oriana Financial. And I'm Chip Barkel. You're a Willwodale eXp Realtor. So thank you.
Thanks again, Chip.